Okay, welcome back, everybody. This is likely going to be my third video. I haven't been keeping up on on posting regularly, but hopefully that's going to start to turn around. I like to post these journals. So another day that my analysis was accurate, I had this is the E-mini S&P 500 micro December contract. Um, I'm going to switch over to a daily chart here so you know what I'm referencing. I'm not sure if I had this on my chart during the last video, but I want to make sure that all of you guys realize this is not a supply zone. That's not what this is. This is a um, what was my original view of the original consolidation of this market maker buy model on the sell side of the curve. That is not a supply zone. I don't trade support and resistance in terms of traditional basic support and resistance, nor do I trade supply and demand ranges. I don't, I mean, I believe that supply and demand ranges are the same as traditional support and resistance. Um, and I don't believe that works. But so just wanted to point that out. But um, my analysis on the daily time frame, I did not want to trade Monday due to the FOMC minutes tomorrow, and also because of a more broad reason of um, so we had retracement, expansion, and then our accumulation right here. This is today's candle. So we cover that up while I was looking at it on Sunday. We can see we are in an accumulation phase. So basically what that means is that Monday is going to be a Judas swing. There's a very, very high percent chance it will either fall on Monday or Tuesday. And I just from personal experience, I trade or excuse me, I felt that it was going to be a Judas swing on Monday and likely to carry through on Tuesday. Oh my gosh, excuse me. So we see um, this daily bar coming up, and my colleague and I agreed on we're not going to see a downturn likely until it breaches 45.66 again on the E-mini S&P 500. So until we raid this level um, through to Wednesday, I am not interested in shorts. I'm only interested in longs. Um, so dropping into, so now that we know that, dropping into a 15-minute bar, we see that after Sunday's open, we consolidated, made a move lower to trap sell stops, and then continued higher throughout the day. And this was going to be my entry point if I was allowing myself to trade on Monday, which I was not. So I will be trading tomorrow on Tuesday. So 15-minute, you can see the overall move, and you can also see um, this drawn buy side liquidity here that I was targeting. That's sort of that where that bullish sentiment came from. That's previous week high, and then any sort of partial would be taken right here. Excuse me. Sorry about that, guys. My headphones were making a weird sound. I just recently got these headphones in September for my birthday, and they were just making a strange sound. I didn't know why, but I was getting a call on my phone. They were connected to my phone. Um, Sorry about that. So if we're going to head into a lower time frame chart, but I wanted to make sure, excuse me, I wanted to make sure I noted these previous week highs and draw on liquidity from a 15-minute time frame. I guess kind of your tip for the day is that your 15-minute bar is going to, or 15-minute candle is going to give you um, the most information on relative to a broader range. So obviously your 1 minute and your 30, 15-second time frames are going to give you the most information, and it's not just noise. So don't let retail concepts kind of engineer that in your brain. That's how I was taught. I was taught to look at nothing less than a 10-minute candle. And I soon started to figure out that uh, due to the fact that there is no buying and selling pressure in the market, then that narrative of anything less than a 10-minute candle is just noise. That's flawed. That narrative is flawed. So, yes, you can trade on a 15-second candle. You can trade on a 1-second candle. Is it a good idea? No, not if you're a beginner, because and I'll go into this too. Um, but that's if you hear the term, it used to be kind of a buzzword. It's sort of died down now, but high frequency trading algorithms. So a lot of proprietary firms use these, and that's all they're really doing is the same inefficiencies because right time is fractal, right? Remember that. So the same inefficiencies that you see on here, um, like this buy side imbalance, sell side inefficiency, all their high frequency trading algorithm is doing is waiting for a rebalance and scalping that move. So they're entering right here and exiting up here. That's all they're doing just on a 15-second chart. So they're scalping for maybe, I don't know, 1 or 2 points. But if you scalp 50 contracts for 1 or 2 points, it's a lot of money. So that's all they're doing, and they're trading full contracts too. So that's 10 times the leverage that I use in the micro contract. So keep that in mind too. Um, so that's all they're doing on those lower time frames. But to really get down to the brass tacks, we're going to drop into first a 5-minute chart, because this is how I do my sort of top-down analysis. Is I start on the daily, then I go to the hourly, sometimes the 4-hour, either 4-hour or hourly chart, and then I drop into a 15-minute, and then I drop into a 5-minute. And then if I need to go further down in order to find a fair value gap that I think will be filled, then I will do so. So right now we were just on a 15-minute, right? Now we're on a 5-minute. Remember, I trade the model 2022. So I have a bullish bias going into today. Remember, I wanted to see it sweep that 45.66 before I'm interested in taking any sort of short, and before I'm interested in looking for any kind of short. That's how you formulate directional bias. There might be short setups that produce in a daily bullish trend. There might be. You do not want to look for those. It's like I said in my first video, you will get burned. I've gotten burned doing that. Okay? I've seen ICT do it, and he knows, he actually uses an algorithm. Not a lot of people know that. He uses an algorithm. I mean, listen to his Twitter Spaces. If you have the time and dedication to listen to 3 to 6 hour Twitter Spaces, he reveals a lot about himself. And I'm sure it's not by accident. He's not putting himself in harm's way for the most part, but he uses an algorithm. Um, and hopefully I'm kind of going on a tangent again, but hopefully one day I'm going to code my own algorithm based off these concepts because these concepts work. The only limit to them is human error. So, we make mistakes in our analysis. There are things we don't see because of human error. And all that AI and algorithms do is take out the human error. The computer only does what you tell it to do. So all you guys that are freaked out about losing your job or maybe not being able to get a job in the future, I would not sweat that as much. But okay, I'm getting off track again. Let's really dive down into the Model 2022 entry so that I could catch this whole move if I was permitted to trade on Monday. So we're looking at a 5-minute chart, right? And we see a dip down. Again, we want to be noting time and price. So I'm back home. I'm back in Illinois, so I'm on Central Time. Um, Generally at school, I go to school in Indiana, so I'm on Eastern Time in that region. Um, so keep in mind, I am on Central Time. So we have 8:30 open right here, and then we have 7:30 stop hunt. Okay, so when I'm coming to the market in the morning pre-market, I'm noticing, okay, here's the low right before 7:30. Okay, that's the nearest low right before the 7:30 news embargo or stop hunt. Now, I don't think we had any news today, but a lot of times, and this isn't always per se, but a lot of times you're going to see um, the IBPDA deliver price as if there was a news embargo. Okay, and this is important for your notes, is a lot of times you're going to see that at the 7:30 Central Time stop hunt or the 8:30 Eastern Time stop hunt. And then the other time in the day you're going to see that is right around New York lunch. Okay, so New York lunch is going to be um, 12 o'clock to roughly 1:30 is when the market will um, begin its script of the New York lunch hour. Now, some of you are probably wondering, okay, do all the traders, in the world take lunch at the same time? No, they don't. I'm sure most of them don't even eat lunch. So that right there is what proves buying and selling pressure is not controlling the markets. Price delivery controls the markets, right? So, and price delivery is based on time, right? Time and price. Okay. So we see the most previous low right before the 7:30 stop hunt. It takes it out in a bearish direction. Okay. See this move? That's a bearish stop hunt. That right there, that alone reinforces my directional bias. What? Why? It's not going in my favor. Why would that reinforce my bias? Because we're taking out, okay, when I say we're, that's the price delivery algorithm. It favors institutions, okay? It's taking out sell side liquidity in order to target buy side at a later time. So when I'm bullish on a day, I generally don't get into a trade unless there's something specific that, I haven't thought of right now, or I can't think of off the top of my head. Unless there's something specific, I don't like getting long until we take out sell side in a discount array. I want you to put that in your notes. That is going to confirm your directional bias. Okay, so in your notes, I want you to write, do not go long until sell side liquidity is taken in a discount array. Okay, so why are we in a discount? We're not in a super deep discount, I can tell you that, but number one, we're in an accumulation phase, right? I pointed that out on the daily chart. We're in an accumulation phase and we took a swing down. Okay, that swing low is your discount. So we swing low, and what happens? Okay, we make an intermediate term high to a short term high back. No, I'm sorry. This would be, I'm still kind of learning this part, so bear with me. This would be your long term low to a short term high, and then we create an intermediate term low. Okay, what happens after we make this low? Number one, we form a breaker. Okay, so this right here is swept at a later time. Right here, that move. Okay, that's what I'm pointing out. So we create our breaker. Where's our breaker? Right here. This would be my breaker. Okay. Now I give when I trade breakers, I don't very often trade breakers. Remember, I pretty much solely trade the model 2022 for the time being. I want to start with one model and build off that. That's a mistake I made very early on, was I was trying to do it all. I was trying to trade order blocks, stop runs, breakers, model 2022, silver bullet, inverse fair value gap, all of these different entry models, optimal trade entry, all of these different models, I was trying to do it simultaneously. And that was sort of my cockiness taking over of, oh, I'm an experienced trader. I can handle more than these other viewers of ICT can. And that was a very big mistake. I was almost handicapping myself, because you have to focus. All of these models are profitable. They all work. And if you want to learn, you learn step by step. I was biting off more than I could chew. So again, I only trade the model 2022, but if I see that form a breaker pattern, that just reinforces my bias. So number one, that reinforces my bias. We took sell side first. Okay, number two, we formed a swing high and then a breaker. Okay, so we have a bullish breaker. Number two, this intermediate term high was taken, it was displaced bullishly. So we see this large displacement candle to the upside. That's exactly what we want. That's exactly what the model 2022 calls for. This candle is the market showing you its hand. That's the market tipping its hand to you. Let's see. I just want to make it easier to see. This candle, okay, right at 845. That right there is the market tipping its hand. Because we take sell side lower just to displace higher. That's That's institutional order flow on a very micro scale, right? Time is fractal. So we go up to the daily chart just because I want to make it clear what I mean by institutional order flow. In general, you are going to want to read institutional order flow on high time frame charts. So from this low up to this swing high, or I guess I should say all-time high in the E-mini, is bullish institutional order flow. Okay, let's just make this a little more clear. That's bullish institutional order flow. So there are retracements in this order flow, right? That's them scaling, that's distribution. Okay, we have first stage distribution, second stage distribution, and then a change in state of delivery. I realize I'm using big terms. This is why you need to go through ICT's mentorships. You will never trade another way again. It is the end all be all to trading. It is, and it won't ever change. It can't. They will be sooner. Oh my gosh, I'm getting another call. Okay, sorry about that, you guys. You will not understand what I'm talking about until you watch his mentorships. Okay? They are long. They are difficult to understand. But anything that's worth it is. Okay, getting back to it. So we have bullish institutional order flow, right? Because they're accumulating down here, manipulating lower in order to reaccumulate, okay? There's multiple stages of accumulation and there's multiple stages of distribution. Why is that? Institutions have a lot of money, right? Exactly. Exactly. You need a lot of contracts in order to make a lot of money. And I'm not talking about, a 300K salary. I'm talking about billions of dollars a year. They don't make that off of buying at a support level and selling 15 points at a resistance level. Okay, don't get me wrong, 15 points in the ES, the E-mini S&P is exceptionally well. You can make a living buying and selling 15 points. That's not good enough for institutions. Okay, they need these 500 point, 600 point moves. This is bullish institutional order flow. Okay, what happens after the a change in the state of delivery? You're probably seeing it already. Bearish institutional order flow. Yeah, see that? Change in state of delivery after their stages of distribution. Okay, distribution is them exiting their long positions in this swing here. So they're exiting as it's starting to climb up to all-time high, right? Now they're exited. There's a change in the state of delivery. All of the inefficiencies down here, like this, right here, this imbalance was never filled. Price comes down in order to fill that imbalance, to fill that inefficiency, and reach for liquidity. So changing the state of delivery into bearish institutional order flow. Okay, now it looks like we may have another change in order flow, but for this is overall order flow for the current time being. This is bullish order flow. Look, you do not want to trade against order flow, especially when you're starting out. Especially when you're starting out. So for you guys that are starting out, and if you're starting to demo trade, I wouldn't look for shorts until this is swept and until this is swept. Now, if we see displacement lower, we may reanalyze. But that's order flow. So I'm trading with order flow. The trend is your friend, right? I'm trading with institutional order flow. You won't ever beat the big guys. You just won't. Don't even try. The markets are rigged in their favor. So now that we know that, I'm going to get this clutter off my chart and we're going to drop back into a 5-minute chart. Okay. So we just looked at institutional order flow on a more macro scale, on actually probably the most macro scale you can get. That's still relative to looking at a day-to-day basis. That's the most macro you're going to get. Now, one of the most micro scales of institutional order flow is displacement. Displacement is just price delivery. So it doesn't mean that someone bought it down here and that's why price is going up. I'm sure there were institutions getting their buys triggered as sell side was swept so they can get filled into their long positions, right? Someone has to sell them those contracts. If they're going to buy it, they can't buy it from thin air. Someone or some entity must sell them the contracts that they are buying. They are buying from that entity. That's what's happening right here, except it's a little more forceful. It's not as nice. These markets aren't nice. So again, intermediate term low to make a long-term low, okay, forms our breaker. We see displacement through it. I'm going to get rid of that, but still mark this candle in your notes. If you need to take a screenshot of this chart, go for it. Whatever you need to do. I take screenshots of ICT's charts and I post them in my notes. Okay? A lot of this stuff is visual. It's a lot easier to understand from a visual standpoint. Anyway, so we see displacement to the upside. Now, pretend that we don't see the rest of the day. We just see this displacement, okay? This candle here, this 845 candle. In the moment, you are likely going to be, I just flipped down to a 2-minute chart because that's where I look 2-minute, 3-minute, 2-minute, and 1-minute. That's where I look to enter in my positions. So what do we want to see when we are looking to trade the model 2022? After we see displacement, this creates a fair value gap right here, right? I'm going to mark it out. I don't know if it's going to show up super well. Right here. Can I switch it to a buy side imbalance, sell side efficiency? This fair value gap is formed from that displacement. Now, you have two entries here, okay? If you are an advanced trader and very stubborn on, or very, I should say confident is probably a better word. You're very confident about your directional bias for the day. Here's your first entry. Sell side, buy side imbalance, sell side inefficiency. Right here. Okay, there's a fair value gap. It gets rebalanced to almost immediately. That's a very strong setup. Let's say you miss that. You're not that confident, okay? And you can even look at this too as one of your model 2022s. This could be your shift in market structure. In fact, obviously it's easier to say in hindsight. If I had been paying closer attention to the charts, right? I didn't know I was trading on Monday today. I shouldn't say I didn't know. I did not plan on trading on Monday, so I wasn't going to place a trade. So I was away from my charts. I am on Thanksgiving break, but either way, um, this is an intermediate term high. I'm sorry, this is a short term high. This is your intermediate term high. That's your long term high. So in order to see a shift in market structure, this has to be broken. And it is right here. And that displacement, okay, this was a 2-point candle. That's displacement in the ES. And for one candle, 2-minute candle, 2 points, that's displacement. And we see that displacement create a fair value gap because it's only delivering on the buy side. Remember the paintbrush analogy? You're only brushing up, so you have to brush back down into it. We get a full, okay, this is why I like trading the ES. Because look at the candles are very blocky like this. I actually like that. That's very algorithmic. So we see that imbalance get rebalanced perfectly, perfectly, perfectly. You cannot get a better rebalance than this. You really can't. So this is an algorithmic rebalance right here. Because the entire wick fills the entire inefficiency in one stroke down. Okay? And the body of that candle. This is what triggers proprietary algorithms to get into high frequency trades, right? We're on the 2-minute, or I should say higher frequency trades, because obviously there's charts in like the 15 and 10 seconds and 5 second. This is what is triggering higher frequency algorithms to get into this trade. The wick and the body tells the story. Okay? Filled the inefficiency with the wick, and the body is refusing to close in this inefficiency. That's telling you there is strong bullish order flow. So if you're too scared to take an entry there, that's okay. That's another confirmation for your trade. Here's your next fair value gap. Okay, here's your next buy side imbalance, sell side inefficiency. Again, only delivering on the buy side. So when I see that, price starts delivering higher, higher, higher. In the moment, here's what you're going to be thinking. I just missed the trade. I just missed the trade. I could have made 5 or 6 points on that. 5 or 6 points is a pretty good amount in the ES. If you're not good with making 5 points in the ES, you might have a gambling problem. Okay, I mean that's just the truth. So we see that in the market, and in real time, you will be thinking, I just missed my opportunity. I missed the trade. Okay, patient, 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 patient. There you go. There's your fill. There's your fill in order to sweep this inefficiency, rebalance this inefficiency again, and look at that. Look at that displacement higher. This is an hour after open. An hour. You don't see quote unquote volume coming into the market like this an hour after open, because it's not people buying it up. It's not volume based. It's price delivery. Price delivery. You are going to hear me say time and price delivery so many freaking times throughout this course of me journaling my trades or me journaling setups. You are going to hear me say that so much you're going to want to like put earplugs in. That's what the market comes down to. So we see displacement even higher, right? This is all buying pressure, right? So let's pretend we're in this trade, okay? I'm going to put a circle for where you would want to place your limit order. So you have the low of this candle here, okay? See the bottom of that wick? What do you want now? You want one tick below it. Watch this number over to the right, okay? So the low of that candle is at 45.2675. One tick below. Boom. That's where your limit order is. So I'm going to put an ellipse right there. Put up just a tad. That's where your order is. Where's your stop loss? Now this is a good question, because when we see volatility like this, you need to allow for slippage. Okay. This is one of those things that I'm working on, is stop loss efficiency, because I don't necessarily want a 10-point stop in the ES if I'm trading on the 2-minute chart. That's not ideal, but then again, you have to realize if you have a wider stop, it doesn't matter as much as you think it does. It doesn't matter the whole, 1-to-1, 1-to-2 risk to reward or stop loss ratio. It's not as, groundbreaking as you might think it is. The groundbreaking part is, does my framework work and does it favor my directional bias? In other words, am I right about the trade? Because you guys think about it. If you're right about the trade, you could have a 100-point stop loss. Don't do that, but hypothetically, you could, right? Because you're going to win the trade. You don't hear that a lot in retail concepts. Why not? Because they don't fucking work. Okay? In retail concepts, you can't have a 20-point stop loss and trying to trade in a high frequency manner. You can't do that. You'll blow your account. I've done it before. Okay? I used to trade without stop losses. I'm sure if someone listening to this is in that same position. So, where's my stop loss going? I'll show you. This is my first thought, below this low. That's where my stop loss is going. Okay, so 45.26, 45.23. You're gonna have a 3.25 stop loss. Is that really, is that bad? If you can't live with a 3.25, 3.5 point stop loss, don't trade. Okay? If you can't live with a 3/4 stop loss, then A, chances are you're over leveraging. That's your first problem. Number two is you're clearly just a rookie. And I don't like saying that because it discourages people. You know, I don't like being called that, even if it may be true. It's discouraging. But the idea around my stop loss being here is because if price is going to break this low, then it's going to keep going against me. Okay? Then that means my analysis of direction was incorrect, at least for this trade. Maybe at some point later in time, you know, in the PM session or tomorrow, I could see another bullish entry. But I'm not going to force that in this setup. I'm going to have my stop loss here. If for some reason it stops me out and fails the breaker, the model 2022, and bullish order flow, okay, three things. If it fails that, then I'll gladly take the loss, because that means there's manual intervention. I'll talk about what manual intervention is at some point in time. Okay, so we have our long entry, and then our stop loss. So if price trades down into here, boom, we're filled. If it keeps trading down, boom, we're stopped out, and we're out of the position for a -3 points. That's nothing. Okay, even if somehow 3 points equates to, you know, $200, $300 for you, and your account is that big to where it equates to that, that's nothing to you. That's nothing to you. If I'm trading 2 contracts for $3 a point, that's $30, right? Is 15, yeah. That's a $30 loss. That's nothing. You guys, this is a business. This is a business. Stop thinking that it's anything other than that. Stop thinking this is a little online casino for you to just fuck off and play around. This is a business. If you get stopped out on an excellent trade, that is the cost of doing business. That's all it is. Don't beat yourself up for it. Okay, I gotta stop rambling. So let's keep getting into this trade. So what are we aiming for, right? So we have our entry, our stop loss. Now we need our target price. We're aiming for this. Look at that, 26 to 39. I'll take a 14, 15 point win in the ES. Okay. I don't even know what that would equate to. I'm going to pull it up on a calculator. So I'm risking $30 to make $150 on this trade. I want you to think about that. And let's say this, so if I'm trading 2 contracts, right? If I'm trading 2 contracts, I usually take a partial. I usually don't take full pulls unless I'm doing a high frequency trade. So first partial, second leg out. So I'm making anywhere from $150 to $175 in this trade, risking $30. You go into your chart, or you tell me your framework or your concepts that offer a better return than that. I trade on a $2,000 account, you guys. I'm not rich. If I'm able to make 10%, 15% in a day, or I'm sorry, it's like 7%, something like that. If I'm able to make that in a day, ask your long-term investor buddies how much they expect to make within a year. Within a year. Because I can promise you, I'll make their return that they'll make in a year within one day, within one trading session. So this is how powerful day trading is. No, it's not gambling, unless you make it. So let me finish just framing this out in case you guys want to take a screenshot of it. Here are your two exits. Okay. So again, we have our entry. I'm just going to make this a little bit bigger. So this is going to be our trade today. Now, Nick, why didn't you capture this move? I don't need to. I don't need to. I really don't. If you make 15 points in the ES, you're good, dude. You're done for the day. You don't need to keep pushing your edge. If you push your edge, you're going to dull it. Okay? ICT said that, and it's very, very true when it comes to trading. Push your edge when it comes to learning, when it comes to back testing, when it comes to expanding your knowledge about trading. That's when you push your edge. If you push your edge when it comes to price action, you're a gambler. If you push your edge in trading, you will dull it. You ever seen a knife getting sharpened? If you push the edge super hard, the steel wears out. You dull your edge. Okay? So, in other words, I'm not worried about this move after that retracement. I'm not worried about that. I don't care about that. That's great if you wanted to keep like maybe one contract runner in the trade, but I'm not worried about that. So, hopefully this is easy to see for you. I'm going to delete that, but basically here's I'm going to make this a dashed line, and then I'm going to shrink it. So this dashed line, if you're making kind of like a legend or something in your notes for this trade, you can label this dashed line as your stop loss limit, your stop limit, whatever you want to call it. And then these blue lines are a shift in market structure. So this is your model 2022. I gotta say, I'm actually getting proud of myself. I'm starting to pick up on directional bias a lot better. That I would say directional bias is one of the most difficult things to be consistent with in trading because it's one of the only things that really, really matters. You're going to spend a lot more time focused on directional bias than really anything else. Um, so just keep that in mind. But thanks for tuning in today. Hopefully this video is a little bit shorter. Um, but yeah, I will see you guys hopefully tomorrow. I'm likely going to look to take a trade tomorrow. So hopefully I see you guys. This is a pretty long video. So if you watch till the end, I really appreciate your viewership, and I really, really, really hope this helps. Really hope this helps. Okay?